Good morning, everyone, and welcome to KRI's webinar, Redefining Credit, the Rise of Buy Now, Pay Later in the Consumer Credit System. I'm Tiba. I'm a researcher at KRI, and it's my pleasure to be your moderator for this webinar. We have a panel of experts with us today to discuss this important topic. Before we begin the discussion, let me start with a brief introduction to KRI. The Khazanah Research Institute is a policy-based think tank that carries out research on the pressing issues of the nation. We are a non-for-profit organization that is incorporated in 2014 and is funded by Yayasan Khazanah. Since then, KRI has published a number of reports on multiple areas ranging from housing, social protection, digitalization, labor market policies, and more recently on climate. Now I would like to invite Dr. Suraya Ismail, the Director of Research at KRI and also the lead author of the report, to give opening remarks.
Thank you, Tiba. Thank you, Tiba. And let me just give a very good morning, Assalamualaikum, and a very good morning to all. Let me first welcome and thank you for sparing your precious time away from your busy schedule today to join KRI's webinar, Redefining Credit, the Rise of Buy Now, Pay Later, BNPL. Ladies and gentlemen, I would like to take some time in these opening remarks to give the genesis of this project, the financialization of our lives, values and trade-offs, and some brief introduction to today's part of this major report. The genesis of the project first. During the COVID years, there is the stark indebtedness of households in Malaysia and across the world that we have witnessed. The inequalities between households too were made apparent in terms of indebtedness. There is those in the middle class and above can work from home, and we saw an increase in the level of savings. However, those below that line, quote unquote line, appears to be taking home moratoriums to the maximum and fully utilizing the EPF withdrawal schemes. Now, that was the time when the KRI chairman at that time, Tan Sri Nur Muhammad Yaakob, conceived of the idea for this project. I must give this to him. He told me that we must, Suraya, we must look into this problem, these pressing issues of the nation, where his thesis was that this level of indebtedness stems from a bigger issue of the country, which is the level of financialization of the economy that has crept down or cascaded down to households. And with that, what can I say, fiat or wahyu from him, and I actually really believe in exploring this issue as well. We started this project, the financialization of our lives, as you see in this slide, values and trade-offs. We started this, as I mentioned before, post-COVID, back in 2022. And it took us 2 years to actually go into all the different permutation that we could have. And in the end, we looked into 3 items, BNPL, student debt, and housing. And ladies and gentlemen, all 3 will be de-webinarkan, and this is the first of the webinar series that we'll have for this report. Basically, we look into financial capitalism, which is where finance has grown beyond its traditional role as a provider of capital for the productive economy to an industry of its own. It feeds into itself. It does not feed into wages. It does not feed into employers or firms buying more capital, productive capital for the workers to work with, but it feeds into the shareholders' values, what is good for finance. So this sort of objectives have, of course, its impact on the households or the economy. So that is why we look into the financialization of our lives because of this phenomenon. So it has crept into the everyday lives of households with its attendant risk transfers and increased level of debt for households. So we are articulating a different worldview where we think that, rather than a finance industry that fits into itself, serves itself, why don't we go back to finance for the productive capital, for the productive economy? And therefore, it will be executed within the values of financial inclusion with the normative behavior, institutional arrangements, rules and regulation, and it mitigates excessive trade-offs between profit and social welfare, as starkly demonstrated during the COVID years. So this was something that we felt as KRI, looking into pressing issues of the nation, we have to look into this as well. So these were our research objectives, 1, 2, 3. We look into, we want to provide analysis into societal well-being items, housing and university education to reduce incidences of high household debts for low and middle range households. Remember what I said earlier, there was a clear demarcation of who benefited in financialization. And secondly, we analyze market push for consumerism through the use of buy now, pay later schemes amidst the backdrop of household wage stagnation. I'm Generation X. During my time, kita simpan dulu baru beli. But currently, it's BNPL, buy now, pay later, which is basically an attribute of consumerism and instant gratification, which I think permits into our cultural and societal behavior, which I think needs to be strictly regulated. But that's my view, but the panelists will discuss today. Based on that, we provide policy options for the institutional arrangements, which is the intermediaries of finance and private firms, and the role of the state, because these are outcomes of institutional arrangement. So if we don't, what we call, shake the pillars of institutional arrangement, we can't get the new outcome that we wish to have. In order to provide improvements to both the outcomes and institutional context of BNPL, student loans, and housing delivery system. So without further ado, I would like to thank especially the panelists for coming on board to discuss with KRI. But I also would like to extend my special thanks to Professor Nazari, who was also our peer reviewer for this chapter 2. I do encourage everybody to download this report and read it and debate about it and tell us if what we are doing is right or not, because I think we must start this conversation about the financialization of our economy and its positive and negative effects. Thank you. Over to you, Tiba.
Thank you, Dr. Shraya. Before we begin the discussion, I'm pleased to introduce our esteemed panelists. We have with us Prof. Muhammad Nazari Ismail, Honorary Professor at the Faculty of Business and Economics in University of Malaya. He has an extensive academic and professional background and an author of 7 books, with his latest publication being Kemakmuran Ekonomi Tanpa Riba, published by Dewan Bahasa dan Pustaka. He has acted as a consultant and trainer with various public and private sector organizations, including the Malaysia's Prime Minister Office, Perton, and Panasonic. Prof. Nazari holds a BSc Economics from the University of Wales, an MBA from the State University of New York, and a PhD from the University of Manchester. We also have with us Datin Azrita Abdul Aziz, who has been with the Securities Commission Malaysia since 2000. With over 20 years of regulatory experience, she is an expert in capital market laws and products, including equity, bonds, derivatives. She previously led the Corporate Governance Department and was the head of Authorization and Licensing Department at SE. Currently, she serves as the Deputy Head of Task Force on Consumer Credit, a joint initiative by SE and BNM, focused on enacting the Consumer Credit Act. Datin Azrita holds a degree from the London School of Economics and Political Science and a postgraduate degree from University of Malaya. We also have with us Mr. Alan Lee, representing the BNPL industry. As the head of Shopee Pay and C-Money Malaysia, Alan is responsible for driving the growth of the e-wallet, credit, and insurance business. He also holds an engineering degree from Oxford University and has over 10 years of experience in management consulting, asset management, and corporate finance, with a focus on technology, media, and telecommunication. Lastly, we have with us Shirin Hazira Hishamuddin, is a Senior Research Associate at KRI and also the author of the Chapter 2 of our report. Prior to joining the institute, Shireen spent close to 10 years working within various private and public institutions, including the Central Bank of Malaysia, PricewaterhouseCoopers, and Bursa Malaysia. Shireen holds an MA in Policy Economics from Williams College, US, and a Bachelor of Science Economics from the University of Warwick, UK. Thank you all for being here today. I now invite Shireen to walk us through the key findings of the Chapter 2 of the report, Redefining Credit, the Rise of BNPL and the Consumer Credit System.
Thank you, Tiba, for the introduction. So if I may, I will get into my presentation today. So I have 15 minutes, so I'll try to do that, my presentation within the time. So good morning, everyone. Welcome to the webinar and thanks for dialing in. Before I dive into the topic of BNPL today, I would like to first introduce the concept of financialization of the everyday. The project lead, Dr. Suraya, has started off with this very well. So I'm just going to go through this very briefly. Just to say that finance has grown really beyond its traditional role as a provider of capital for the productive economy to an industry of its own. It has crept into our everyday lives of households with its attendant risk transfers and increased level of debt for households. So our main thesis here is that finance has really become decentralized in its form of power and is being exercised through individuals' own interactions with new financial technologies and systems of financial knowledge, BNPL being one of it. So by participating in financial markets, individuals are encouraged to internalize new norms of risk-taking and develop new subjectivities as investors or owners of financial assets. So that's the financialization of the everyday. And then now we move on to see how it has fared in our economy. So if we look at our bank assets as a share of GDP, it has grown significantly over the past few decades. It was only at 10% in 1960, and now it's at 153%. So that is huge. So our financial sector has really grown.
Shireen, sorry, if you may share the screen. Yeah, thank you. Sorry for interrupting.
No worries. I don't know. You're not seeing my screen?
Yes, we can see now. Thank you.
Can you see the screen? Okay, good. Thank you, Tiba. So let me get back to my presentation. So I was saying the size of the financial sector has grown significantly over the years. And if we look at our household debt as a share of GDP, it has also risen. So at the moment, the level is at 84.2%. So our economy is also very financialized. Now let's take a look at our wages. This is actually the work of our fellow colleague a couple of months ago. So what this slide is essentially trying to say is that wages have been stagnating, especially at the lower deciles of the wages spectrum. So if you look at the left-hand side chart, annual real increase in wages at the bottom 50% over the 2010 to 2019 period is only a measly 56 ringgit in value. So this is really a clear indication of wage stagnation in the economy. If we now look at really quickly into household expenditure, what we have found from our analysis is that the expenditure space of households at the bottom 70% consumes basic necessities. And when we do see an increase in standard of living within this category, it's usually just a differentiation between consuming something better but within the same category. So for example, I like to quote Dr. Soraya's example always. If you were previously consuming just ayam percik or ayam goreng, you're now consuming something like ayam KFC. So meaning that the differentiation really is not so much of a value add. So this to us is not really the middle class. So what we're really trying to say here, there is an incidence of the bottom 70% versus the top 30%. versus what we're usually more familiar with, which is the B40, M40, and the T20. So that gives us a bit of context. If I can just quickly recap, there's wage stagnation in the economy, and household expenditure has not been moving much in terms of value add. So now I'm going to dive into BNPL a bit. What really is BNPL? So this is really just for the benefit of all of us. I'm sure all of us, if not all of us, or most of us, would have already come across BNPL one way or another. So BNPL really is a credit arrangement that enables consumers to purchase goods and services immediately, where you can defer payment through scheduled installments. So unlike traditional credit cards and loans, BNPL often does not require extensive credit checks. So the model's allure really is in its simplicity, accessibility, and flexibility, which appeals to a broad spectrum of consumers. From the limited data that we have, it seems to be the younger population. So now let's take a look at recent trends. Over the Q1 to Q3 period in 2023, there were roughly about 2.9 million active BNPL users, which are mostly young and middle-aged. So this is from the CCOB task force. In terms of usage, there's been quite a traction with double-digit average quarterly growth rates in transaction volume and value. So one thing I want to highlight here is that BNPL transactions were mostly of low value, ranging between 40 to 500 ringgit. So on average, that's about 80 odd ringgit. Unfortunately, we do not have the data to look into the types of items that are being purchased, but one could argue or imply that these low value items may consist of more basic necessities. But again, we don't know that for sure. So moving on, this is just to give a bit of view of what literature is saying. So there's been varied findings in terms of what some of the researchers out there are saying. If you look at the studies that look at the Asia market, BNPL has been seen as a potential catalyst for financial inclusion. So for instance, Rejla Ward and Zhao in 2003 suggest that BNPL can be a viable alternative to traditional high-interest loans, where it can offer a relatively safer borrowing channel and potentially shield households from predatory debt cycles. But on the negative side, researchers have found that BNPL is a driver for over-indebtedness, especially in the longer term, where you could see BNPL causing a decline in credit scores, increase in household default risk. Bragg also found in 2023 that BNPL schemes appear to be shaping a more indulgent and less restrained consumer culture. So again, the findings are a bit varied at this juncture. Now, if we look at the cultural features contributing to BNPL, we do see it reshaping the cultural dynamics at play in the consumer credit system. I believe Dr. Suraya has also talked about this in her opening remarks earlier, where BNPL is fueling instant gratification, especially amongst the younger generation. So what it does, it caters to this desire by offering a frictionless shopping experience, allowing consumers to acquire products instantly without any upfront payment. Now, one could argue that it is not always bad, but I think what we are more concerned with here is the negative values that it is pushing for in terms of, for example, when you're buying something that you don't need. So those are some of the things that we're concerned with. The same with consumerism and attitude on debt and credit. It can potentially manifest in consumerism, where acquisition of goods is closely tied to personal identity and social status. Now, a bit of overview of the BNPL regulatory landscape globally. I'll not go into too much detail on the regulations bit here. I believe our panelists from the CCOB will go a bit deeper into the Malaysian context. But this is just to give you a flavor of what the regulations are like for now globally. So it's been diverse. BNPL is relatively new, A lot of countries are taking action to try to regulate it, but various countries are at various junctures in trying to manage this. So some countries are a bit more prudent in that they've put on quite a strong claw on the scheme. Some countries are a bit more soft. Some are also taking a proactive approach. Now, what are the implications of BNPL? First, as I mentioned, BNPL has reshaped credit accessibility, retail dynamics, and financial regulation, leading to nuanced impact on the broader Malaysian economy. So one of the things we can potentially see is rising household debt. While I think at the moment, BNPL is still representing a smaller proportion of debt, of household debt relative to things like credit cards, personal loans, and housing loans. But globally, BNPL has raised concerns about responsible lending practices and potential risks associated with the overextension of credit to less financially literate population. So I think there is still a need to, while the proportion may not be as big, I think there still is the need for us to proactively manage it so that it doesn't, grow very quickly, very soon. We also see a potential for BNPL to change the credit market in a way. So it can, at this juncture, serve as a worthy contender against traditional banks and credit card providers. I think we do see that a bit, maybe not so much in Malaysia yet. The competitive landscape has spurred innovation and led to traditional financial institutions exploring collaboration or even launching their BNPL products. So while competition has led to a more vibrant and diverse credit market, there is a risk that traditional banks may engage in riskier lending practices to maintain market share. And as we know, traditional banks may have a larger capacity to do so. So this may lead to financial instability in the long run. And lastly, BNPL can influence savings rate. So as consumers opt to spend more through BNPL, through various factors, one of it being the cultural factors that I went through earlier, they may save less. So the tendency to prioritize immediate consumption can reduce overall savings rate of the economy. So we really need to go deeper into seeing what are the types of consumers that are consuming this via BNPL and what types of goods are it consuming, whether it's a need or a want. The influence of BNPL on savings rate, as well as debt levels and overall consumer financial health, is likely to have long-term ramifications. Now, what are the policy options? So we see the need to balance between regulation and innovation in financing. I think in this day and age, you will see more and more innovation in financing. And to say that we should totally kill it off, I think that's also not right. But going back to the point Dr. Sarah was making about influencing the values in which the financial system is adopting, I think that's important from the regulatory side, the state side. So there's a couple of policy options here that we propose. I think one of the most important one is for cost regulatory oversight. I believe the CCOB task force is currently working on the enactment of the CCA, the Consumer Credit Act. So that's exciting and that's coming up soon. I think I'll let the CCOB panelists expand on this more. Another important thing here is to encourage consumer education and awareness, because at the end of the day, there will be many innovative products out there, and what's more important is for consumers to really understand what is it that they're getting themselves into and what types of purpose are they using that for? Is it for more productive purposes, or is it for more, I wouldn't say unnecessary, but it's for more of your wants. I would say so that's important. This is also important because I think we do need to take a closer look at the demographics that's taking on debt, BNPL, and also other types of debt, where if it appears that they're more low income and they're younger, meaning they might not have more information on this, they might need to be educated a bit more to know what they're getting themselves into. Another policy option I would like to point out is the integration of BNPL into household debt metrics. I think right now there is a debt picture available where we roughly know that the proportion of BNPL debt into overall household debt metrics is a very small portion of, I think it's in the 0.5, 0.6%. But I think as we look at it from a larger, higher level perspective and policy perspective, I think we do really need to formalize it into the metrics and let it be more transparent and known to people. And also at the household level and the consumer level, for them to keep in check the type of portfolio of debt that they're accumulating. Because I think we all know that with BNPL, it's very easy to take on more than one or two BNPLs at a time. So, it's very easy to lose track and then end up being in a position where you are taking on more debt than you should be taking. With that, I end my short presentation. Thank you very much, and I pass it over to Tiba. Thank you.
Thank you, Shireen, for the insights. It is interesting to know that a large group of active BNPL users are the younger generation, like the millennials, the Gen Z, who are more comfortable with digital innovations and have like different attitude or views towards credit and debt. Unlike our parents or grandparents who saved first to buy certain things, now with a simple, flexible, and easy option like BNPL, they are being used for instant gratification to meet the aspirational consumption desires. But there is also a rising concern when the data is showing that BNPL is being used to purchase a lower value products, which might indicate that they are being used for basic needs. Now I would like to invite our panelists to give remarks for our findings. We will begin with you, Prof. Nazari. Over to you, Prof.
Assalamualaikum warahmatullahi wabarakatuh, and good morning to everyone. Thank you to Kaltana Research Institute for inviting me, Dr. Suraya, especially, and also Madam Chairman Tiba and fellow panelists. I will begin with the broad overview of the issue of trade and debt, and then go later on to BNPL. So as we know, trading activities are essential aspect of human life, and that increased trade will lead to prosperity. So we want to encourage trade because BNPL is supposed to also encourage business and trade as well. So we talk about that. Trading nations are very prosperous nations, and in Islam itself, trade is encouraged. And we see in the Sharia anti-free trade practices are prohibited, and monopoly, etc., hoarding, etc., are not allowed in Islam. And then we see that money is the means of exchange. As a means of exchange, it's very important. It lubricates trade, and therefore Islam encourages the use of money rather than barter trade, because trading activities without using money is inefficient. And just to share an anecdote, which may seem to be unrelated, but later on we will see it's quite related, why Islam does not allow usage of gold for making vessels for eating and drinking. Why? This is based on the hadith by the Prophet, the same Prophet, where we are not allowed to drink from vessels of gold and silver. So gold and silver are supposed to be made to jewelry, but not for making vessels. And some scholars say that the reason why this is so, or this regulation comes about, is because if people use a lot of gold for vessels, then the supply of money will be reduced, because you cannot use gold for gold coins. Instead, this gold will be taken up by rich people to make vessels for drinking and eating, and this will reduce the amount of money in the system, and this will affect trade negatively. Trading activities will be lowered. You have deflation, basically. What about debt in the eyes of Islam? We know that debt is also a natural aspect of human life, and that some people are richer than others, and some people may fall into debt. And we even have this saying in Malay, hutang emas dapat dibayar, hutang budi dibawa mati. And that shows that that is part of our life. Muslim scholars encourage giving loans, but discourage going into debt. So you want to bear that in mind. We are encouraged to give loans to help. Why? Some scholars say that it's actually better than donations, because when people ask to borrow money from you, normally that shows they are really desperate. They really need money. Whereas if you donate, it will not be targeted to people who are really in need. But we are discouraged from getting into debt. There are many sayings of the Prophet regarding this, that if you do settle your debt before when you die, then you will not be able to enter paradise for them. That's one saying of the Prophet. But when we give out loans, it must only be for the purpose of charity. So this is something which is very important for us Muslims to remember, that we are not allowed to use debt to make money for ourselves, meaning profiting from debt is not allowed. Therefore, basically, a debt for profit industry which is based on debt is not allowed, because it's only supposed to be for charity. So when it comes to debt, the Islamic perspective of it is not supposed to be an industry by itself. Which we know now, right? Look at the statistics presented just now by Shirin, the growth of the sector, financial sector, and we know now the global debt now is about 300 trillion, more than 300 trillion now, USD. That shows that it's a very, very large industry, bigger than the GDP of the world. Now, as I said just now, giving loans in order to gain a profit is a dosa besar. But on the other hand, selling product on credit with increased price is halal. So this is interesting. If you sell your product, and then when people ask for deferred payment over 3 months or over 1 year, and then because of that you say, I want to increase the price, that's allowed. So selling by deferred payments with increased prices allowed, but lending money with interest to consumers to buy products is haram. So that shows that what is not allowed is the lending for profit itself. If you sell something and increase the price because of the deferred payment, it is still allowed, because Islam is not against trading. It's against this industry or this profiting from indebtedness. Okay, so clearly Islam is against profiting from loans. Just to share another information which is related, even though it may appear to be unrelated to BNPL at the moment, zakat can be given to people who are debt-stricken. People who are in debt are qualified to receive zakat payment. But the percentage of debt-stricken people should be small and solvable by zakat. So for zakat to do this, the number of people who are in debt shouldn't be too big, right? But that was in the past. Why now people are in debt that we saw just now, the household debt is now 84% of the GDP now, right? Now the zakat collection of all the majlis agama in Malaysia now, I did my study a couple of years ago lah. I would say probably about less than 1 billion. KL is probably about 600 million annually, Wilayah Persekutuan, and then you add everything from the other states, could be about 1 billion. I do not know exactly how much zakat payment, but it cannot be more. It should be around 1 billion. But the household debt, as we saw just now, is what? I will show you again now. Is 1.53 trillion. That's 1,530 million, right? Sorry, billion. So because it's trillion, so 1,000, more than 1.5 thousand billion. So you can see that we cannot talk about zakat as a solution for debt indebtedness in society. In the past, zakat can solve the problem of poverty and indebtedness, but now it's impossible. Why? Why does debt increase so fast in modern time? Why is it now 1.52 trillion? That is the household sector. In the corporate sector, it's also more than 1 trillion. Of course, the government sector, we know, is 1.5 trillion as well. Because debt is now an industry. It's a big industry now. And money is now no longer gold or physical things, commodities like gold and silver, but it can be created out of thin air by the banking industry. Where every time money is created, debt is also created at the same time. So when the bank issues a loan, debt is created and money is also created at the same time. So that is the reason why debt is increasing at a very fast pace. And just for people who don't want to believe me, I will present an evidence here, an article published by the Bank of England, Quarterly Bulletin 2014 Q1, entitled Money Creation in the Modern World. This is the screen grab of the article. It's very small, so I have enlarged it. I've enlarged it so that we can read it clear. It says here, in the modern economy, most money takes from bank deposits, but how those bank deposits are created is often misunderstood. The principal way is through commercial banks making loans. So whenever a bank makes a loan, it simultaneously creates a matching deposit in the borrower's bank account, thereby creating new money, which is different from what is being described in some economic textbooks, which says that banks are intermediaries which receive deposits from household and then bank then out the money. That is wrong. That is not true. So what we have, some of us have studied in economics courses, actually the facts were wrong. The banks do not need deposit from households in order to lend money. It creates money and then that becomes deposit. So banks do not play intermediary role actually. They create money when they lend money. Okay, so this is something which many people do not know, and that's the reason why I in conversation with some bankers, and they also said they didn't know this. So whenever a bank makes money, you create new money. So new money is being created all the time. In Malaysia, we can look at the credit growth, and that will tell you the amount of money, new money being created. And what happens because of this system, we will see that there will be gradual increase in price of goods and services over time. That's the reason why last time you can have a lunch. When I started work last time, lunch would cost me about 2 ringgit, 3 ringgit. Now it's 10 ringgit, right? Because of the inflation over time, for the value of money. We also see periodic episodes of financial crisis. We also see the growth of very large, highly indebted corporations. And this explains why wage is stagnant, because these corporations are highly indebted, right? As we know, even Maidin is more than $1 billion in ringgit in debt. So you can imagine how much. That's why Maidin complained last time when the government asked for minimum wage of increase it to 1,500. Maidin was one of the companies that complained because that would increase its cost of operation. And we know why, because Maidin is under a very high debt burden. At the same time, you have hyper competition, because what happened is that the financial industry can lend money from thin air to create these companies to come into industries, and they compete against each other. So we see this in many industries, hyper competition. For example, in the transport sector, you have bus companies, right? Many bus companies, express bus companies from Singapore to KL, for example, and they compete And what happens is that they have to reduce costs because of the debt burden. And we see that's the reason why the drivers are paid very low wages. So they are paid commission instead. And that's why they like to speed on the highway in order to get more trips. And then that cause accidents. So these are the kind of things that happen in society which people do not know, which are related to the debt burden, which is related to the financial industry. Lack of employment opportunities in the long run, because what happens is that the companies that are highly indebted are reluctant to hire new people. They prefer to ask the existing workers to work harder, to work longer hours. Relatively stagnant wages I mentioned just now, which also stated in the report. And also, and when you have stagnant wages and at the same time prices are increasing all the time, that's when you have a cost of living problem. And interesting also, most people do not realize this, our country has gone down in terms of fertility rate. Why? When people find it very difficult, everything is so expensive, they don't want to have too many children. Some they don't want to get married because it's very expensive to get married, right? Or they say that they have to work first before they get married. So by the time they get married, they're above 30, and then children only 2 or 1 child only. So we can see that as our country developed, as our financial sector developed, our fertility rate has gone down drastically. I just want to share here. It's all related later on to BNPL. What is our birth rate now? It's only 1.6, according to the Department of Statistics. I was shocked because I thought it was 1.9, compared to 4.9 children in 1970. Actually, before that, our grandfathers, they have 10 children, right? 12 children. But now it's only 1.6. And we know that you need 2.1 for a society, for the population to grow. Below 2.1, below 2, then the population will shrink over time. And at 1.6, that means our population is going to be shrinking very, very fast. Okay, other than that, you have other negative effects which are insidious when you have highly indebted society. You have psychological stress, you have suicides, you have health problems. People who are in debt will be stressed, and it's not uncommon. This is anecdotal, but I've read it, some reports where people who have got a lot of debts will have higher likelihood of getting heart attacks because of stress. Family conflicts and breakdowns, increased crime rate, and increased social problem. Everybody knows this, right? When you have a high indebtedness in society, this will lead to all these effects, which are interrelated. Okay, now, so we go to the BNPL, which is selling on credit. The price is not even increased, and no interest is charged. So on the face of it, BNPL is better than selling on credit with increased price. It will also increase sales, lead to expansion of business, and generate economic growth. But all businesses we know prefer cash payment. Right? They don't like, businesses do not like to be paid over time. They prefer everything to be cash, and because they can then roll the money further, faster to expand their business. So why is BNPL scheme growing? Well, number one is the demand from consumer, of course. And secondly, is because you have supply. So behind the BNPL, which we will see later, is that there are banks, financial institutions are willing to finance the scheme at the back of it. So BNPL platforms, companies, we find out about Shopee later on. We can ask our panelists. But some companies in the US, they work together with banks in order to provide. So you have a banks that finance the whole thing. And that is the new business for them. So the BNPL platforms become their intermediary to the PMP, P2P. But behind it are the banks. This is the article in the US, published by Bloomberg. BNPL players often use partner banks as a source of funding. I don't have the statistics in Malaysia, the data in Malaysia, but maybe Bank BNM can share this later on. But as the BNPL grow later on, where are they gonna get the money, right? As the business BNPL, we can foresee the scenario where BNPL grows in size. They have to find money from somewhere, and that's where the banking institution will come in to provide the source of funding. This is even the report says that collaboration with banks and financial institutions are also common in Malaysia. Standard Chartered. This is KRI, the report which I read just by KRI. Okay, so banks are at the back of it. Okay, I want to share a study done by on BNPL, which is not published yet. It's a study. Based on the analyzed data, it was found that materialism, which is giving importance to worldly possessions, that's materialism. BNPL use, impulsive buying is buying without prior planning, and compulsive buying is where you buy beyond your needs. It's like a sickness, a psychological disorder, buying something which you don't really need. All these had positive and significant relationships. It was also found that both BNPL use, impulsive buying, mediate the relationship between materialism and compulsive buying behavior. So at the end of it, it's compulsive buying behavior, which is dangerous because you are buying things which you don't need, and you may end up not only wasting money by going into debt, but the mediating factors are BNPL use and impulsive buying. So these are something which we have to be worried about, because it can lead to a sickness, a problem of compulsive buying behavior among consumers. And the study also found that this factor plus the annualized cost, because when you add in the total of penalties, if people do not settle their debt, even though it's low, but when you annualize it, it actually is about 18% also. That's almost, it's the same as a credit card. So the result of this research show that, one of the conclusion, BNPL pose as much, if not more, a threat than credit cards when it comes to consumer debt management. So this is one of the main conclusions of our study done by my colleague and a student. The details, we can share the paper later on. I will ask my colleague to share if you are interested to know the detail of the study. Now, for me, I look at the overall picture just now about the growth of the banking industry and how they create money from thin air, and that create cost of living problem, stagnant wage in the situation of increased price of product and services. So they are all related, as I said. So when you have high indebtedness in society, that will lead to cost of living problem. But now you want to solve the cost of living problem by giving more credit, more accessibility to credit. Is something like encouraging credit purchase to consumers to overcome the cost of living problem. Is like encouraging drug users to take drugs to overcome their drug addiction problems. It's like it's a cycle. You are going to make it worse and worse and worse over time, right? Because I mentioned just now, cost of living problem, because of stagnant wages and increased prices, is due to the increase in indebtedness in society, where because this is caused by the growth in debt, where money is being created by the banking system, which reduce the value of money over time. So these are all related, and you want to solve that by making it more easy for people to go into debt. This is like a terrible vicious cycle. It's a madness, basically, right? It's not only it's not going to solve the problem, it's going to make it worse. So what we don't want to see in the future is something what happened to microcredit, where people had good intention to make life better for the poor people by coming up with the microcredit schemes. But we saw, this is a report way back in 2000, more than 10 years already. What happened is that people go, because of this scheme, the problem of indebtedness got worse and worse in society, to such a point where the poor who the microcredit scheme was supposed to help end up selling organs in order to pay their debts. Kidneys, in this particular case, the guy's case is selling their own kidneys in order to solve their debt problem, indebtedness problem. So this is what we are very worried about if we don't watch it. We say that we want to help people in order to make payments, to afford to buy things, but in the end, what we are going to do is we are going to cause them to end to fall into a situation where they may do harm to themselves. Okay, I'm sorry I have to end up with this analogy to make my point. Otherwise, it may not come across so well, so I'm going to make it anyways. As we know, sex is necessary for procreation and continuity of human race. It's not only good, but essential. But what about when we talk about the sex industry? When we talk about the sex industry, which is allowed in some countries, but we don't allow this in Malaysia. Why don't we allow sex industry in Malaysia? The other country will say that, yes, we should allow because we can have tighter regulations, we have education of consumers, right? Educate the young people. When you want to go for sexual services, be educated, use protection, promote responsible practices so that you can get the benefit from this industry. Can we say that? We know the answer, right? We know the answer. So I'm saying that is also the same. It's as necessary to help people, give them loans, but don't make it an industry. If you make it an industry, then you are going to create a lot of problems for society in the future. Thank you very much for giving me the opportunity to present my thoughts on the topic. Thank you. I'll stop sharing now.
Thank you, Prof. You have brought in an interesting view on that, which sets the context for our discussion today, like selling product on credit with an increased price is acceptable, but not lending to profit from that. So, and you also have highlighted that that is an industry of its own, and even that we have highlighted in our report as well, and that we shouldn't be fueling consumption out of credit and profit making by the credit providers. In my personal view, I would also agree that encouraging credit purchases to address cost of living issues would potentially exacerbate the underlying problem, especially the right solutions should be through wages. And when they are of lower income groups and they are quite vulnerable financially, so any income shocks will push them even further into debt. So thank you, Prof, for the interesting insights. Now I would like to invite Datin Azrita to give her remarks. Over to you, Datin.
Thank you, Tiba. Assalamualaikum and good morning to everyone. Thank you for inviting me to this webinar and giving me this platform to share some perspectives on BNPL. Professor has given a big picture just now on how that was created and how it impacts the society as a whole. I'm going to go down and zoom into BNPL specifically, sharing some data with you because we do collect data from the BLP industry on a quarterly basis. But my focus today would very much in relation to the regulatory interventions that we are thinking of in relation to the industry. And this is really very much in support of KRI's research. So let me begin with the first slide. Well, during the COVID pandemic and everyone was in lockdown, we were doing online shopping, which consequently opens up the opportunity for the BNPL industry. The three largest players in the BNPL industry now are Shopee, Grab, and Atomy. These are really household names that everyone is very familiar with, yeah? And they dominate more than 90% of the industry. So based on our statistics, yeah, as at the end of the first quarter of 2024, there are 3.7 million users, or about 1 in 10 of the population are actively using BNPL. Yeah, and most of them are working adult in the age group of between 21 and 45 years old. This BNPL facility has a huge positive influence to the merchants, the small merchants, who are basically the backbone of the economy as well, contributing a greater volume and sales. And as you can see, the number of merchants accepting BNPL has increased. And these merchants are mainly from the three sectors, which are the F&B, food and beverage, retail, and transportation. Next slide. Now, the BNPL industry has doubled, as rightfully KRI has pointed out as well, in terms of volume and value year on year. Throughout 2023, 77.3 million transactions worth 6.2 billion has been recorded. And we see wider acceptance and a growing popularity of BNPL among the Malaysian population. Next one. Now, let's look at the amount of credit being extended. So the total credit amount, or the debt, which has been extended by the BNPL players, stood at 1.4 billion as at the end of the first quarter 2024. Obviously, this is very much small compared to outstanding balance of credit card, which stood at 45.5 billion. Okay, we are worried about credit of BNPL. Yes, so CCOB Task Force is monitoring it very closely. But at this point in time, we are kind of comforted still because 97% of the credit is being paid on time. And only 3% were recorded as 1 day past due. 1 day past due meaning 1 day you are late in making your payment. That is what we consider as in the statistics. Yeah. So those who are not familiar with the industry, I would like to explain that the BNPL players, the providers, they would issue reminders before the due date. Some of them issue at 9 days before via in-app notification, via SMS. So customers must be responsible, have your eyes open and ears open, and they have to be responsible customers and pay their debt. And because of this, the DPD at 1 day is only at 3%. Yeah. If the customers do not pay their debt, automatically the BNPL provider would actually freeze the account of the customer, and you may not have access to future credits. So this model is kind of different from credit card, yeah, because credit card you don't pay, then there is interest being compounded on your outstanding balance. Yeah. Okay. So while I said next slide, Shireen. So while I said that at this point in time, and at this point in time, we are not very, very worried yet, but we would like to monitor the growth of the BNPL because it could be out of control if not monitored. So what the government is working on now is to establish the Consumer Credit Act. As the name implies, it aims to protect the credit consumers and to promote a fair, efficient, and transparent credit industry by ensuring proper conduct and responsible lending practices among the credit providers. The Act will see the establishment of the Consumer Credit Commission. We have now is the CCOB, Consumer Credit Oversight Board Task Force, which will then morph into the Consumer Credit Commission, inshallah. And what we are doing is we are progressively going to be regulating the credit providers and credit service providers, starting from the unregulated credit providers, the non-banks at the moment, which are the BNPL, BNPL, leasing companies, factoring companies, impaired loan buyers, debt collection agencies, debt management and consultancy agencies. Yeah, that's in phase one. And then in phase two, there will be a transfer of regulatory powers, inshallah, but from the other ministries, whereby will also be regulating the money lenders and pawnbrokers, non-bank hire purchase, and also credit sales. So at that point in time, there is going to be a consolidation of the non-bank credit providers, which makes it more easy for us to regulate and leading to consistency in terms of protection for the credit consumers. Next one, Shiri. So what do we mean by regulating these players who are currently unregulated? Of course, Bank Negara regulates the FIs very, very well. All the standards are in place and they are very closely supervised. But in terms of the non-banks, we want to ensure that those who are providing credit, they are fit and proper as an entity. They have key personnel who have the expertise and the capacity to undertake or carry on the business. The personnel must adhere to good conduct. That is, they have to be professional and they have to behave in a manner that is fair, ethical when engaging the credit consumers. One area of focus, given that household debt is at 84.5%, as quoted by KRI, we want to make sure that credit consumers who are taking on BNPL are checked in terms of their capacity. So when we talk about capacity to pay, it's not about credit worthiness, which means being credit worthy for the debt, but also we want to check into affordability of the person. So beyond a certain threshold, we would require the credit providers to perform an affordability assessment, which means that you have to check that the person could actually pay, could commit to its future obligations without causing undue financial stress. So in the conventional way of doing things, the banks would ask you for your salary slip, your KWSP statement, and ask for your commitments. What we are doing here is that we are asking for the same kind of outcome, but we realize that BNPLs are also fintech players. So we are open to recognizing perspective, different modeling, alternative modeling, predictive modeling for as an estimation of their income. At the end of the day, we want to make sure that whatever credit that is being extended to the consumer, they can afford to pay their future obligations. Yeah. So that is a very key area that we are stressing upon to the non-bank credit providers in phase one. And then we look into conduct such as, we want to make sure that you have to remind the credit customers before the due date. You must have a complaints management system. You must make sure that whatever terms and conditions that you impose on the customer is in layman language. It is transparent and it's clear to the customers. Sometimes the customers, at the spur of the moment, wanting to buy that piece of item, they would just agree with all the terms and conditions without understanding what have they agreed to. So on the other hand, the customers are also responsible in making sure that they read and they understand what are the consequences of not paying their debt. As Professor said earlier just now, hutang tu perlu dibayar. Whatever it is, they have to pay. And we do realize some customers too, sometimes they switch off their in-app notification when the BNPL providers try to call them and SMS them, and then they say they're being harassed, walaupun it's just an SMS. So it takes two, both sides have to play their role. Here at CCOB, we are trying our best to make sure that the industry itself, the professionalism level is being elevated. Everyone is behaving ethically with integrity, but customers have an important role to play and they are also accountable and responsible in ensuring that their credit is being paid on time. Yeah. So again, it's very difficult to be a regulator in this day and age. We have to strike a balance between what's good for the industry, because we also do understand that the BNPL industry is serving the unserved segment of society. As I speak, I'm just being reminded of the Goldilocks moment. Not too hot, not too cold, just right. Not too soft, not too hard, just nice, you see. So that's why I think between us and the industry players, we are closely engaging with each other to strike that right balance, so that the people who really need credit can be served, but it has to be measured. We will ensure that, the growth of the industry is closely monitored, and proper requirements and proper safeguards are being put in place so that this household indebtedness can be contained. Yeah, so those are essentially my last words, Tiba. It's a short presentation, but I'm open to discussion. Thank you.
Thank you, Datin Azrita, for those insightful remarks. It is clear that BNPL is becoming a popular payment method, with 1 in 10 Malaysians using it to make a transaction at least once a year. And this growing demand underscores the importance of having the Consumer Credit Act in place to ensure that there's responsible lending practices and providing adequate protection for the individuals as well as small businesses. Thank you, Datin. And next, I would like to invite Mr. Alan Yee to share his insights from the BNPL industry's perspective. Over to you, Alan.
Thank you, Tiba. And good morning to fellow panelists, and thank you to KRI for giving the opportunity to share our story in this dynamic Malaysian BNPL space. I'll be sharing with you and the audience some insights into SPay Later, which is our buy now, pay later product. Our core principles when it comes to product decisions, how we run the business, and will importantly aim to dispel some myths. Some of them being very sensationalist around BNPL that we hear from industry observers. So if you go to the next slide, please. Right. So I'll chat a little bit about SPay Later as a product first. As Shireen pointed out in her presentation, this is a credit facility that allows consumers to make purchases online, for example, on the Shopee e-commerce platform, and also in offline stores, such as Giant, Petron, also anywhere you see this pink Do It Now QR code that the Malaysians are very, very familiar with. So consumers can then choose to repay what is owed at the end of the month or over multiple installments of their choice. This gives them the opportunity to manage their cash flow as they see fit. And we're also very proud to say that we're the first Sharia certified buy now pay later provider in Malaysia, and we've been around for over 3 years now. Can you go to the next slide, please? Thank you. So we take social responsibility very seriously when deciding how we operate and structure our products. So we're driven by 3 core principles. The first of which is to be responsible lenders. This is very, very important. Consumers are given personalized credit limits that can go up and down, depending on the type of behaviors that they exhibit during the course of their journey with us. We employ sophisticated income, risk, and credit modeling techniques, where we leverage large-scale user data and AI capabilities to come up with the right decision. Number 1, on who should be eligible for credit, and then also how much credit they should be assigned. So this is us playing our part to be responsible lenders. In addition to this, we take a very prudent approach towards the provision of credit. For example, if a user is just 1 day late in their repayment, their access to credit is immediately frozen until they have repaid what is owed during that billing cycle, plus a late fee of 10 ringgit. And as Datin Azrita pointed out earlier, if you have a credit card, you may be aware that our rule to immediately freeze accounts on missed payments is a lot stricter than in using a credit card. We also do not compound the outstanding balance, which prevents users from snowballing their debt. So this is also a very, very important principle. The second core principle for us is that of transparency, and we endeavor to make our terms as clear and easy to understand, that being the important component, easy to understand as possible to all of our users. We make sure there's no hidden fees. What is owed is to us is clear to the users. Users are reminded to repay well ahead of the due date through a variety of contact channels. We also believe that over-communication to our users is important to ensure that they don't go overdue. And customers really appreciate this fact. Thirdly, third principle here, we are proponents of financial inclusivity and education. And we want to give the underserved customers the right amount of credit and to steer them towards being able to perform more responsible financial planning. For example, people in the gig economy or those who receive cash salaries still find it difficult to access credit through traditional channels. So we want to be able to serve this segment. So if we move on to the next slide, please. Thank you. So in an effort to dispel some of the common misconceptions that, for example, buy now, pay later can be predatory and then encourage financial mismanagement. This may be something that has been observed in the West. And as pointed out in the KRI paper, buy now, pay later players appear to be much more prudent in Asia. So we ran a survey with over 30,000 respondents last year. Over 80% of them say that they found SPayLater very useful and they would recommend it to friends and family. So now, if it was truly predatory, I don't think this satisfaction rate would be this high. This shows that we provide significant value to our users, and we are very, very proud of this. Secondly, we looked into the change in behavior amongst our users before and after using SPayLater. 47% of the users who previously borrowed money from friends and family stopped doing that. And now they may have borrowed money in case of emergency or to bridge the gap towards the end of the month before their salaries come in. And so SPayLater plays a pivotal role here to provide users with that flexibility and that facility to not further burden their friends and family. Thirdly, 43% of users who previously used to pawn their belongings have also stopped doing so after using SPayLater. So we've got very real use cases here and benefits to society. And we find these results to be very encouraging, that we're providing a service that's of tremendous value to those who need it, but critically also that users are demonstrating a higher degree of financial management than what most people assume or what the industry observers think is happening. So Sherry, we can move on to slide 5. Thanks. The second common misconception here is that users are not repaying their debt. And I think it's shared by Dr. Hansrita earlier as well. This outstanding overdue percentage has been coming down. I think in the KRI report, it also said that the overdue amount, number of people not being able to pay back has been growing. But evidently, from our chart here, the percentage shows the overdue balance comparing credit cards in Malaysia versus SPayLater. It has been coming down. We've worked very, very hard to improve our users' repayment performance. And we're proud to say that our performance as of March last year has surpassed that of credit cards for overdue balances. And we strive to continue growing in this manner in a very, very sustainable fashion. Now, to note, the slide here is not necessarily to scale. We can move on to slide number 6. Thanks. I also want to address a third common belief that buy now, pay later is burdening households with more and more debt to the point of it being unsustainable. As of the third quarter of 2023, we see that over 85% of all household debt comes from vehicle and property financing. Now, buy now, pay later contributes to only 0.1% of overall household debt. So yes, I think buy now, pay later as a credit facility, mathematically, yes, it adds to household debt, but its impact in the grand scheme of things currently may be significantly understated. Let's move on to the next slide. The last point I want to share is that we often underestimate our youth. And as we we observe the youth are one of the early adopters of these sort of new fintech products. We say these individuals are not responsible with credit. If given the opportunity, they will spend it willy-nilly on non-essential items. They'll waste their money, then get into debt unnecessarily. So I want to leave you with 2 clips from our user interviews that points to the contrary, that there are substantial considerations behind how they buy using credit. And also what you deem as a necessity or a need may be very, very different from what somebody else sees as a valuable need. We really should not be too hasty in casting judgment on the purchase decisions of others. Thank you. Shirin, you can play the clips.
Yes, I do use buy now, pay later quite often actually. Usually I try to keep the purchases online to a minimum, but I do find myself using it like often or offline nowadays. I know that sometimes you can buy groceries at Village Grocer using pay later, so I will do that, or maybe go to a restaurant like KFC. I'll just like, let's just say I'm trying to like save up some money for something else. Maybe I can just like buy KFC using the pay later now and then. Yes, in a sense that it has helped me to plan around my budget. Like let's just say if I have a sudden expense that I need to make, like for an essential like product, like let's just say a drawing tablet of mine breaks down, I need a new drawing tablet and I don't really have enough money to just pay one lump sum. I can just like, actually there's a security for me in the buy now pay later that I can divide the cost and into like several chunks, and I can just have the tablet now.
So just to note that Jonathan is a graphics designer, which is why he needs a drawing tablet. Sure, you can play the next clip.
You want a demonstration? You want me to show it? I've got it right here. Marshall headphones. I didn't want to drag the payment. But at the same time, I was just like, you know what? I want to keep the money there just in case for whatever knows. 1 month only, since I saw there was no interest, buy now, pay later. If I saw there was interest, I would have just bought now. Yeah, whenever there's zero interest, I would prefer to do that. It's just, you know, in what if happens, that's it. I bought an electronic skateboard, right? That was last year, if I'm not mistaken. And that one is for me and a friend, and he primarily uses it to commute to work. So pay later actually helped us in terms of like, he's just starting his job. When he gets the money, then we'll pay it off, right? Yeah. So that gave us the option to get his commute to work first. It helped that it was pay later, because other than that, we would have had to buy cash, since we don't even have a credit card.
Thank you. Back to Tiba.
Okay, thank you, Alan.
Yes,
It is interesting.
I do use buy now, pay later quite often
sorry.
actually.
Yeah, it is interesting to hear that BNPL can have like positive societal benefits, especially for its inclusive nature of providing immediate credit to those needing to meet the basic needs. Like you rightly pointed out, like one person's wants might be someone else's need. But as highlighted in the report, wage stagnation is also a reason for why some groups of the society are resorting to such borrowing options for their necessities. So to the audience throughout this presentation, if you have any questions for us, feel free to write down your questions in the Q&A box in Zoom or the comment section on Facebook for those who are watching us on Facebook Live. I'll now begin our discussion. My first question is to Prof. Beyond concerns over indebtedness, what other key effects do you see, especially for households, from the rising use of BNPL schemes?
Thank you for the question. I think I shared with you just now the finding of the study by by my colleague and a student, is that you can see there is a relationship between impulsive behavior and compulsive behavior with BNPL. So that is a very that's what is very worrying about it. They lead to compulsive behavior. They can lead to compulsive behavior, which therefore will result in problem for the consumers. Of course, I talk about in the future we can see this is going to go and expand further when people continue to use this scheme to buy stuff. So BNPL will be expanding, and it will be provided with funds by the banking sector. So we will expand, and when that expands, as I said just now, the debt sector will increase, the money supply will increase, and you have all those problems of which I listed just now. So it's all related to the whole system and the industry. It will therefore have negative consequences not only on personal level but also on societal level.
Thank you, Prof. My next question is to Datin Azrita. The Consumer Credit Act is aimed at providing a comprehensive framework for regulating credit providers, including the BNPL schemes. In your view, can CCA help to reduce household debt, and if so, how? And also, what are some of the improvements within the BNPL market that the CCOB task force hopes to observe through the enactment of CCA?
Thank you, Tiba, for the question. So in relation to how the CCA could have a positive impact ataupun help the household debt, the state of household debt. So again, I go back to my point about ensuring that the providers undertake proper affordability assessment. So what we require is that if the provider is extending credit of more than 1,000, at any point in time, you have to perform an affordability assessment on your potential customer. Okay, so affordability assessment is not just about credit worthiness, like I mentioned earlier, but a more intensive kind of assessment. They are looking into your past purchase behaviors, what have you been doing using your phone, who are your contacts and things like that, whether you've been paying on time. And those are the elements that they take into account before according credit to you. And the risk mitigation that they have put in place at this point in time is kind of strict also, like I mentioned to you. The minute you don't pay, they just stop the credit to you, you see. So, and then of course they've got debt collectors to come in, or they have their own internal collection process. But it's strict in the sense that you won't have access to future credit if you are not disciplined enough in finance, in making your payments. So we hope that by having such assessment before credit is extended, then the household debt can be controlled. So they will not be buying on compulsion, and the artificial intelligence that is being adopted by these BNPL providers is able to analyze customer behavior, and the data points are useful enough in assessing whether credit should or should not be extended. I hope that answers your question, Tiba. Did I cover it all? Is there another aspect of it?
Some of the improvements within the BNPL market that CCOB task force hopes to see.
At the moment, we require quarterly submission of data statistics from the BNPL providers, and we are monitoring it very, very closely. So statistics such as the DPDs, the NPLs, the NPL levels, how much is being extended. That is what we are doing at the moment. At the same time, we are also trying to see whether this industry, which there is actually a value proposition of it, can be further further used to help the unserved segment of society. As you can see, I think you would be aware that 40% of the Malaysian population are unserved by the banks. If we are too tight on the regulations, right, this 40% will go underground, and they may go to the illegal money lenders, which is going to have a more negative impact on the society. So that's where the Goldilocks moment I mentioned to you just now. How do we strike a balance as to what's right for the consumer? Because if it's just too stringent, then there is negative unintended consequences to the industry as well. Yeah, so we want to develop the BNPL industry by encouraging them, for example, to submit their credit data to a credit reference agency and so that consumers develop a credit scoring system, which is also a useful data point in the future when these credit providers want to extend loan to these consumers. At the moment, the banks are all submitting to CRIS, but the non-banks, where do they go to? They don't have a CRIS. So then they would have to submit data to one of the many CRAs out there, whether it's CTOS, Experian, CBM. So what we want to encourage is that credit providers, you must share your data. You must submit to a CRA. And therefore, with that, then we would have better information on the creditworthiness of a particular individual. And the other area, again, as we also want to make sure that, those BNPL, katakanlah they're calling themselves as Sharia compliant just because it's interest-free loan, yeah? You have to be true to label when you call yourself Sharia compliant. The Sharia-ness must be end-to-end, not just on the product itself. The whole process must be Sharia compliant so that your customers would buy into the concept of a Sharia compliant BNPL. So those are some of the developmental aspects that we are working on as well. Thank you.
Thank you, Datin. My next question is to Ellen. In your opinion, can BNPL be responsibly utilized for basic necessities like to buy groceries items? And also with now the rising from Shireen's findings, also we saw that banks are starting to collaborate, looking for collaborations to provide this kind of credit schemes. So how do you see that BNPL will be evolving in the long run?
Thanks, Tiba. I'll take your question one by one. So how can BNPL be responsibly utilized for basic necessities? So I think it's important here to share the definition of basic necessities to the audience. So the common understanding is it should cover food, water, shelter, and clothing. I think there's an expanded definition to go to that goes into mental well-being, etc., etc. So it goes beyond the very, very basic. For us, we do see that groceries and fashion is one of the top category. And when we say fashion here, it covers school uniforms also. And we do see a spike during the start of the schooling year for users to spend at clothing stores. So these are some of the top categories where we see the SPay laters being used. We also run a whole bunch of campaigns with key partners that cover the basic necessities categories like Lotus, Giant, Mydin. Also our petrol partners, I think in this during this period is quite critical. And we see very, very good traction there. So I think there's one element of education where we tell people you spend on necessities, but also we also play a part to focus a little bit more on our awareness campaigns with some of these key partners. So as demonstrated in the last slide with Jonathan and Rakib, also it's also important to understand that in the modern age, electronic devices also such as mobile phones, computers, tablets, even electronic skateboards could be seen as a necessity for different individuals. So then what is a necessity? I think people need to decide for themselves. These are ultimately productivity tools and that at a glance may not appear to be a necessity for you and me who's doing something else for work in the different field of work. Ultimately, BNPL is just another payment tool with the added benefit of being able to plan for future for your purchases. We have been and will continue to educate users that they are encouraged to use it for their needs, not their wants. Ultimately, be responsible spenders. So the decision is in their hands. To your second question, how do you see buy now pay later evolving in the long run? I think that we're looking forward to healthy, sustainable growth in the industry, with users becoming more accustomed to it as just another payment tool. Unlike the West, so our construct, I think the buy now pay later construct in Malaysia, especially, it started very, very differently from the West. I think all the players collectively have taken a more prudent stance. Unlike the West, where I think it's a lot more predatory, users can very easily fall into a debt trap. So user education will continue to grow. Awareness of credit, utilization of credit, how to use it, what are the implications. Management of cash flow will continue to improve, especially amongst the younger generation, our early adopters. So I think from a financial literacy point of view, I think that's a very, very good thing. This is also evident from comments that we observe in social media groups, where users, it's kind of like a support group. They will go other people to be responsible, to plan and pay back accordingly. So it's kind of self-enforcing also the community of buy now pay later users, which is very, very healthy to see. Financial inclusion also will continue to improve through greater accessibility to small credit lines. This would be for customers that potentially traditional financial institutions don't serve, as they may not see this as a profitable segment or are simply unable to. For example, due to lack of documentation. We see many people in the gig economy, etc. And so these are people that even today will find difficulty in getting access to credit or financial products. There will be a greater collaboration with banks, for example, on funding, also with the reporting agencies, with the regulators to do better credit rating, affordability assessment, and all that. Nevertheless, we believe the buy now pay later industry will remain a minor contributor to overall household debt, which everyone's worried about. To remind our audience, currently stands at 0.1% of total household debt. Property and vehicle financing remains the largest contributor, with over 80%. And perhaps future debates around household debt can also include discussions around these major debt elements, and also bring into the discussion the impact of improvement in productivity or the current wage situation here, that contributes significantly to the overall GDP. I think the important metric here is household debt to GDP. So we shouldn't forget the GDP side of things as well. Thank you.
Thank you, Alan. To Shireen, what will be the most urgent policy option to ensure that BNPL schemes are kept in check, and what are your recommendations to those who might use BNPL?
Yeah, thank you, Tiba. That's a great question. I'll answer the first question first. So I think I also spoke about this during my presentation earlier. Amongst the policy options that we've recommended in our report, I think the 2 or 3 more important ones that I would like to push out is one for regulation to be a bit tighter, or rather to be introduced. So we really welcome CCOB Task Force's role in this with the Consumer Credit Act. While I know a lot's been said about the BNPL industry being still nascent and being under control, I think there really needs to be a proactive approach in how we want to regulate the industry, because like I said earlier as well, I think it can escalate really quickly. And the other policy option I would like to really push for is for a financial inclusion education and awareness. It doesn't have to be always so formal, but I think this is really important, especially if we're getting the demography of the lower income people and the younger generations into the space. I think it's really important for them to really know what they're getting themselves into when it comes to debt. And thirdly, really is the integration of that matrix into the household debt data, not just from the household perspective or from the national statistics perspective, but I think it also be great to to try to have to give consumers or individuals a clearer picture of their overall debt that they're accumulating. Yes, 0.6, 0.5% is a small amount, but if you're already indebted if your DSR is at 60, 70, 80%, you know, more debt is never really good, especially if you're spending it on things that you may not necessarily really need, quote unquote. Yeah, so that's my response to your first question, Hiba. The second question is on advice to people who would like to use BNPL, right? Yeah, so I think that relates to the part about responsibly using the scheme, knowing really what you're using it for. So if you're asking yourself the question of whether I really need this, is this really productively contributing to what I'm doing? Then I think, you know, debt being used for productive purposes is, well, maybe not encouraged, but it's all right. But if you're using it for more, you know, unproductive purposes or purposes that just are fulfilling certain cultural or instant needs, then, you know, it will be something that you need to think about, and also to take a step back and to look at your overall portfolio of debt. Is that money that you can really spend, even if you know, if you don't have 100 ringgit to spend on something and you're using it to spend, then I think that's something to think about as well. Yeah. Thank you.
Okay, thank you, Shireen, and thank you to the panelists. And I've already seen like some of the questions being answered by Prof and also Ellen. Thank you so much for answering those questions. And now we'll move on to the questions and answer session from the public. We have a number of questions here. I would like to start with the question by Hafiza Taufik. How do BNPL providers track the asset quality of their consumer base? Do they have dedicated collection teams to ensure timely payments are made? I believe this question is to you, Ellen.
Yeah. I think so. Thanks for the question. And that's a good question. Yes. So BNPL players have their own collection team, and it's even more important, I think, in Asia, where we take a more prudent and responsible approach to monitor the asset quality compared to the more developed countries in the West. And the reason for that is because, as I mentioned earlier, we have a fixed late fee. There's no compounding interest on the principal. So it's even more important to make sure that the borrowers can pay back on time, will pay back on time, and it's important to make sure. So in order to do that, your asset quality cannot be poor. With the different mechanisms in other countries, they can tolerate poor asset quality with the intention of going after and chasing people to pay back a lot more. We don't do that, and we don't want to do that here. The late fee is simply a flat fee. So if you owed 1,000 ringgit, it's the same penalty as if you owed, say, 10 ringgit. And so we do monitor the asset quality very, very closely internally. We have our own collection strategies. We have our own strategies to make our SOPs to reach out to users, to discuss with them if they're having difficulty or not. So we take a very prudent approach, and we see our customers as our very, very valuable stakeholders, and we want this to succeed in the long term.
Okay, thank you, Ellen. The next question is for Datin Azrika by Adam Zulkarnain. When I think of BNPL industry, I'm often reminded of the collapse of Wonga in 2018 in the UK context. How observant are Malaysian regulators towards the BNPL industry in Malaysia to prevent the worst case scenario of a BNPL provider's potential collapse?
Thank you, Tiba, for the question. Okay, Wonga is actually a payday lender, and I think they have been giving credit so easily that the credits were given to those who can't afford to pay, right? In the case of a BNPL, okay, we are looking at companies who do not take deposits. They are lending out money from their own proprietary, their own money, you see, and they are so small that they do not create systemic risk like the financial institutions. Yeah. So the collapse of Wonga, for these kinds of BNPL players, when you are so small and not so risky, I don't think we would be very worried too much if they close shop lah, basically, yeah. But even so, when we require them to be licensed, this BNPL place will be licensed, we require that they should have a certain level of financial capacity, yeah, which has to be maintained at all times. They must have proper internal governance, for example. They must have a person who's going to make sure that they comply with all the requirements under the law and the regulations that we have. By having all this in place, we hope that these credit providers are sustainable over the medium to longer term lah. Yeah. And that's one area. And again, like I mentioned, the conduct aspect of it when they engage with customers, you have to have clear terms and conditions. The customers must acknowledge, they understand the terms and conditions of the credit agreement. The credit agreement must be fair and does not benefit or does not favor one side, which is the credit provider, for example. The credit provider must make sure that reminders are set to the customer 3 days before the due date. Yeah, things like you must not harass the credit consumer. You must not you must not have conditions which prohibits the consumer from paying early, for example. So if you have the time and you can look into our draft requirements, which is not yet updated at the moment, unfortunately, but which will still give you a good picture of the kind of the expectations that we as potential regulators have on our regulators in the future. So hopefully that creates an industry which is healthy and the consumers are protected. Yeah, I hope that answers your question.
Yeah. Thank you, Datin. There's a question from an anonymous attendee. Hi, Shireen. How different is BNPL from traditional installment plans that have been around for longer, such as easy payment plans?
Yeah, thank you for that question. So I would say there are some differences, but essentially, it's pretty much similar in that. So okay, let me focus on maybe 2 to 3 aspects. One is the duration. So EPPs are typically longer in terms of its tenure. So you would see EPPs being offered at 12 months to 24 months. And they're usually for higher value items. It could include things like household appliances and things like that. So if you're familiar, I don't know if it's still around, but like things like Courts, Mammoth, and all, they used to or are still offering EPPs to households to use for them to purchase these things. So that's one. Two, I think in terms of the interest rate that they charge, some are 0%, but I think in our report back in 2014 and 2016, I can't remember, KRI did talk about this, and it turned out that the effective interest rate that you're actually paying for this is essentially closer to like being a loan now or a personal loan, where it's actually quite high, as opposed to BNPL, where for now it seems like it's still at 0%. And also it's I think the checks that are being performed for you to embark on an EPP versus a BNPL is also slightly different, where EPPs I think do go through a bit of rigor in terms of checking your credit history and things like that, as opposed to BNPL for now, which is as I understand using more of a different approach in utilizing AIs and stuff like that. So yeah, that's my brief answer to that question. I hope that is clear. Thank you.
If I may add to that question as well, with EPP, and so it's following the credit card scheme. So if in the event of non-payment, the outstanding balance can can end up being compounded. I think that's another big difference.
Okay, thank you. Thank you, Alan and Shireen. There's a question from anonymous attendee to Prof. Nazari. What's your opinion on the general public utilizing BNPL on emergency items or during emergency situations such as purchasing a dead car battery? Should BNPL also be used for things like insurance?
Okay, thank you. When it comes to people who are desperate for help, I can't blame them if they can resort to anything when they're desperate, right? I mean, as a Muslim, you are desperate to have food, you can even eat haram food. So a desperate situation is an exception. But for people who are in need, for example, health care, I think we should have institutions to help people, to help people in difficulty, so that they don't have to resort to institutions that make money from their indebtedness. I always say that debt is to help others, not make money from debt. So people should be able to resort to institutions or sources of fund that can help them financially during difficult situation, without the motive of making money from it. And we need to have that in our society. The problem is that because of the change in values, people are spending more than what they can afford. Everybody's in debt now, and therefore institutions that have others are very small. I mentioned about Wakaf institution is very, very small in Malaysia now compared to the total debt in our country now. Total banking assets is about maybe around 4 trillion, maybe, whereas our Wakaf asset is not even 1 billion. So it's very small. So we need to create these institutions that help others. So we need to have a change, and in the long term, we need to change the values of society, where they are not consumerists, but rather they like to help others who are in difficulties. That is what we need in our society now. Thank you.
Thank you, Prof. To Ellen. Hi, Ellen. Can you help us understand how BNPL providers such as yourself make a profit? Is it through certain fees collected, for instance? And I would also like to add on another question for you as well. Like, hi, Ellen, what methods does Shopee Pay Later use to determine users' limit and ensure that they can manage their debt?
Sure, I'll take the first question on how BNPL players make money. So there's a variety of commercial arrangements that can take place. So the first one is similar to EPP or credit card, where the merchant bears the cost. So if a user sees in a shop 0 fees to pay by installment, that could indicate a likelihood that the merchant is paying a small percentage, similar to how the credit card arrangement works, to the BNPL player. On the other hand, for SPay Later, we make it quite clear that there is a processing fee for, depending on the installment that you take. It's about it's 1.5% per month, and we make that quite evident in our fees and terms and conditions. And I think under the incoming CCA, there's a regulation there that states BNPL players should not be able to make money or make a profit from the late fees. So late fees should not be the main driver for profitability. And then I think what was the second question again? Sorry, Tiba.
How do you determine the user's limit and ensure that they can manage their debt?
Okay. So we have a credit modeling system here, and I think this is everybody's secret sauce. So we have a credit modeling system and then an affordability modeling system as well. And we use a variety of data points, both public and proprietary. So public information or financial information like your CTOS and all that can contribute to this scoring. And then also we look at potential spending, transactional data. We can also look at data from financial institutions that we work with to develop this income model in order to work out roughly how much an individual should be able to should be given in terms of their credit limit. And then also we do look at the behavior as they use. So some individuals, they're very responsible where they use on the BNPL function where they pay back at the end of the month, and they pay that very, very regularly. So that may generate a higher score than somebody who is regularly late or uses it very sparingly, and also potentially the type of merchants that they spend on as well. So I can't share too much, but it's a lot of data points, I think. But we're looking into a whole bunch of alternative data points here, which also then helps with individuals who are not kind of served well under the traditional financial systems where you require submission of pay slips, bank statements, or your EPF statements. So this gives a broader opportunity to people to participate in the sector. I think we take serving the underserved here very, very, very seriously.
Thank you, Alan. There are two questions from Berita Harian. Secara ringkasnya, adakah anda bersetuju BNPL berpotensi menjadi pemacu untuk terlalu berhutang, meningkatkan risiko mungkir isi rumah terutamanya B60 dan pengurangan seterusnya dalam akses isi rumah kepada pembiayaan from industry, research or CCOB point of view? And the second question, apakah yang perlu pihak berkuasa laksanakan bagi menjadikan trend BNPL lebih berhemat? Are there any takers for the questions?
I think so. I'll go first, if I may. Datin Azrita. I think the construct of BNPL in Malaysia is very, very different from the rest of the Western world that we very frequently quoted statistics from, where the business model is inherently built to not allow for a lot of NPL, high NPL. If we were to get to the stage where NPL was a problem for us, never mind the levels at which we see in the West. We're looking at fractions of that. The BNPL industry or player would not be able to continue functioning already because these late payment fees are fixed. You're not allowed to compound the debt. We have strong regulations around DCA, which we all abide by. So that industry construct in itself already limits the amount of risk that the BNPL can take. And having said that, we are all very, very prudent in how we extend credit and work with our customers to ensure that whatever debt is repaid back on time. We were in the business of ensuring that the installments are paid back on time. We actually don't want to see any late payments or defaults. That's very, very important. And I think that very fundamentally may be different from what we see in the more developed industry being quoted in research and things like that. On to you, Datin Azrita, if you would like to take the question.
Thank you, Alan. I think we have been talking about household debt and the need to control excessive household debt. From the CCOB task force perspective, I think it's the regulatory intervention that we are looking at. We will continue to monitor and oversee the state of growth of the industry, and we will use the necessary regulatory tools to make sure that whatever credit is extended is measured, and there is no excessiveness which leads to which leads to worry for the country as a whole. Yeah. So yeah, let's pray that the CCA could be tabled in time, and the act would be enacted for all this to materialize.
Just a quick comment from me. Based on our research at university, we see a strong relationship between impulsive purchase and also compulsive buying. So we are worried, and we think that there is a potential that this can cause problem for indebtedness in the future. Thank you.
Yeah, and maybe I can just wrap it up by saying that I think it's the negative values that such a debt encourages. So I think we just need to make sure we keep it in check. That's why regulation is very, very important. And like I said earlier a couple of times, it can escalate very soon, very quickly. So we also hope on our side that the CCA will be able to mitigate this, and I'm very excited for it to be enacted soon.
Thank you all.
May I close up by one last statement that I don't think I made a point earlier. I think BNPL also helps bring activities that are happening in the gray economy into the formal economy. I think that the whole borrowing from unlicensed money lenders and then getting into that very dangerous debt trap. That trap, I think, is a role that we are also playing to bring people into providing more affordable credit, more accessible credit, so that they don't have to rely on things like that. I think, as Prof mentioned, if you're desperate, you will go and look for all sorts of avenues. And I think there's a social element here that we're helping to move away from into the more formal economy, and that where numbers are tracked, the regulators can see how much is previously uncaptured now appearing in formal submissions and publications. So I think that one element is not discussed enough in debates, and very often overlooked, because very often I think we don't see this side of society, as we're all professional, or usually like people having this sort of discussions are from the professional industry. We're not exposed to what people on the ground, if you don't turun padang, go through every day, and we're very aware of this as well. We hear from our users also. Thank you.
Thank you all for your views. I'm very mindful of the time, so probably I will take one or two more questions from the public. Prof. Nazari, there's a question for you from Engku Faris. Outside of social programs or institutions, in your opinion, what would be a better credit facility that can be offered by a financial institution or a non-financial institution to meet society's need while still being profitable for the provider?
Sorry, can you say the outside what? The first part of the question?
Outside of social programs or institutions.
Oh, outside of social program institutions. Well, I think one way of avoiding the need to go into debt to buy stuff is to have saving in the first place. That's what Dr. Soraya mentioned at the outset. When she started the opening remarks, we said that when we were in our culture, our generation, we save money first before we buy stuff. So we are taught that you want to buy something, you save money. So this attitude must be instituted so that you don't have to rely on other people when you want to purchase stuff. You don't have to rely on other institutions, other organizations, financial institutions. You use your own money, save money. So this is something that we need to teach our children, our school children from small. You save money before you buy stuff, but when you are allowed to buy stuff and pay later, this is the bad trend. And then later on, you will be more dependent and more dependent. This is what we don't want. Of course, other than that, as I said, we have to create attitude where we like to help other people. So you create institutions where you give chance for people to contribute to a body that help others, like wakaf. So we need to have that more in our society, but that requires a change of attitude and value system in our society, and that is a lot of work to do on that aspect. Thank you.
Okay, thank you, Prof. I guess it's time to conclude. We apologize for not being able to answer your questions, but rest assured we do read them and we value your feedback in furthering the discussion. I thank all our panelists again for their insightful analysis and perspective. On behalf of KRI, thank you for participating in this webinar. Thank you for your time, all the participants. If you like discussions on our pressing issues of the nation, we invite you to follow KRI on our social media platforms. And thank you all for joining us today and have a great day.
Thank you. Thanks to the audience too. Bye.
Thank you, Tiba. Thank you, Shireen.
Thank you, everyone.